Hey guys, I've Hadid here. Thank you so much for attending the webinar. Thank you so much for being on the presentation. It means a lot to me. I hope you enjoyed watching the webinar as much as I enjoyed creating it for you. I hope you got a lot of value. And speaking of value, I decided to create this additional video in order to help you and to answer the most burning questions that you might still have, and to also answer the biggest problems that most of my clients face before joining the Trading Profit Formula Coaching program. So sit back, watch the video, watch the presentation, take some notes, and I'll see you soon. Take care. Bye.
All right, so let's start with question number one, which is how much money do I need to day trade Forex? And the answer is, before going into how much money you will need to trade Forex effectively, we need to look at why this issue is even important. Does it really matter if you start an account with $100 or $3,000? Yes. All right. It really matters. Although the minimum opening balance is usually $100, but let's face it, if you want to start trading, it's likely because you want an income stream. You want to have like a monthly residual income, right? So where you aren't going to have much of an income stream if you start with $100, since very few people are patient enough to let their account grow, they will risk way too much of their capital on each trade trying to make an income, and in the process lose everything. And it happened to me, and it happens to everyone who wants to make money quick, especially if they're starting out with a small amount. All right, so I'm a firm believer in only risking 1 to 5% of capital. Maximum is 5% on a single trade. So if your account is $100, that means you can only risk $5 per trade, and in the Forex market that means you can take a 1 micro lot position. So while this will build your account slowly, most traders don't want to make a couple of dollars a day. They want to build their account much faster, and therefore will risk $10 to $20 per trade. That means 10 to 20% of their capital, which is $100 here. All right, so sometimes more in an attempt to turn that $100 into thousands as quickly as possible. And this may work for a time if you're lucky, but usually results in an account balance of $0. If you remember from the webinar, we talked about the importance of risk management and why you should only risk 1 to 5% per capital. This is why, okay? So also, new traders are better off saving up more money before opening a Forex account, thus adequately funding their account so they can trade properly. So if you want to day trade Forex, I recommend opening an account with at least $2,000, preferably $5,000 if you have it, if you want a decent income stream. So here's why. So with a $2,000 amount, with a $2,000 account and risking no more than 5% of your account on each trade, that means you are only risking $100 or less on each trade. Okay, 5% of $2,000 is $100. So you can make $200 plus per day if you have a strategy with an edge that makes you win twice as much. What are you willing to risk? All right, so with a $5,000 account, you can risk up to $250 per trade. That's 5% of $5,000, and therefore you can reasonably make an average profit of $500 per day, because we're willing to risk one, and we're willing to win twice as much, 1 to 2 risk to reward ratio. So with a $5,000 account, you can start to create a decent stream of daily income. If you allow the account to grow to $10K to $10,000, you can make roughly $1,000 per day. These are just estimates, of course. A better estimate of your personal income potential will come from practicing in a demo account and monitoring your results before even risking a single real dollar. All right, so always try to test the strategy on a demo account and then go to the real live account. It is also possible to start an account with a smaller amount, such as $500, but if doing so, make a commitment to grow the account for at least a year before withdrawing any money. If you do this and don't risk more than 5% of your account on each trade, you can make about $50 per day to begin with, which is over the course of a year will bring your account up to a few $1,000. So now let's jump online, and I want to show you this amazing estimator to make you understand the difference between starting with a $500 account or a $2,000 account or even more. So let's jump online, okay? All right, so now I'm in radioactivetrading.com, and I love this tool because it makes you it makes you see the numbers. All right, if of course, given that you do the strategy with an edge, proper risk management, consistency with at least 100 trades, and also psychology. So let's see how this works. So for the target return, let's say you have a strategy that makes you win twice as much what you're willing to lose. So target return is 200%. The loss limit here is 100%. Probability of loss 40%. Let's have you have a strategy that wins 60% of the time. And we starting capital, starting amount of $2,000. And we're willing to risk only 5% per trade. So as you can see here, the number of wins here, and this is just the simulation results. Number of wins 59, the number of losses 41. Okay, high value $68,000, low value $2,000, because that's where we started, and the ending amount is $67,587, which is not too shabby. After 100 trades, if you keep executing the same strategy, that's why I always emphasize the importance of consistency here. So as you can see here, we started with $2,000. 5% of $2,000 is $100. So we're willing to lose $100 and willing to win $200. So the first trade was a win. Now it's $2,000 to 100, and we do the same thing. So the 5% of the 2,000 to 100, and you know exactly what you mean here, right? So after 100 trades, okay, we get a total amount of 67,587. That's why it's very, very important to be consistent. So let's give you another example. Let's say you start with a $500 account, okay, and the same thing here. We have a 1 to 2 risk to reward ratio and 60% your strategy on edge. As you can see here, with $1,000, okay, after 100 trades, $39,000. And you might be asking how long in order to have 100 trades. So if you're trading 20 trades per month, that will take you 5 to 6 months approximately, okay? So with the $1,000 starting amount, you will make $39,130. Of course, this is just simulation to make you see the numbers. So if we just put $500 here, I think the minimum amount you can put is $1,000, okay? So anyway, as you can see here, $1,000, if we have 71 wins and 29 losses, you can probably make $196,000, which is amazing, okay? So that's exactly what I wanted to show you, okay? So always have a strategy with an edge of at least 1 to 2 risk to reward ratio, okay? And also that has like a strategy that wins 60% of the time. Risk management 1 to 5%, consistency of large numbers of at least 100 trades, and psychology to keep doing the same strategy over and over again. All right, so now let's move to the next question, which is why should I trade Forex? And we've covered this, but let me make this super clear for you. There are several reasons investors might opt to trade currencies instead of making use of other opportunities. The first one is accessibility. What I mean by that is Forex trading takes place on many different exchanges across the world, and as a result, investors can make currency trades 24 hours a day during weekdays. The Forex market is also the largest capital market in the world, involving more than $5 trillion in notional value worth of transactions per day, which is mind-boggling, okay? Mind-blowing, guys. The second reason is liquidity. Because there is so much activity, the global Forex market provides substantial liquidity to traders, while certain assets may be more difficult to buy and sell. Traders interested in currencies will likely find substantial opportunities. Liquidity risk can occur around major news events if liquidity providers seek to limit their exposure to market volatility, all right? So basically, there's a lot of movements. Okay, that's what I mean by liquidity. And the third reason is leverage. Investors can potentially access far more leverage when trading currency than they can when trading other assets. However, it's important to keep in mind that risk is inherent to investment. While using leverage to make larger trades can amplify returns, it can also amplify the size of losses. That's why it's always important to use proper risk management, 1 to 5%. And the fourth, last but not least, is global exposure. And what I mean by that is Forex trading provides investors with an opportunity to obtain exposure to economics across the world. By taking a more international approach, traders might diversify more successfully or potentially achieve higher returns by putting their money to work in areas that have greater potential. And we also have another reason here, which is low trading expenses, because there are so many buyers and sellers, spreads are low and trading costs are modest. And of course, I'm going to show you in the trading profit formula course that you can use the amazing broker company that they have the lowest spreads, so you can make the highest profits. Okay. Alright, so now let's move to the next question, which is how risky is Forex trading? Like any form of investment, Forex trading involves risk. The currency markets can experience sharp fluctuations, just like the stock, bond, or commodity markets. Therefore, investors interested in Forex trading are encouraged to conduct their due diligence or consult an expert, aka me, before making any transaction. That's very, very important to have the proper education before making any real transactions. The good news with following a strategy with an edge, 1 to 2 risk to reward ratio, and only using 1 to 5% risk management per trade, your risk can dramatically decrease and you will be on the safe side. That's why the 4 pillars are very, very crucial and very, very important, guys. That's why they have to work together in order to minimize your risk and maximize your profits. Okay. Alright, so now let's move to the next question, which is how can I compete with the big banks? The answer is the good news about trading Forex is you're not competing with anyone. In fact, knowing what the bank's professionals speculate can help you get an idea where a certain currency pair is going. Alright, so we're gonna use a different approach here. We're going to be using fundamentals and utilize technical analysis, which involves reading charts to get a better sense of the market sentiment surrounding a specific currency pair. By doing so, we are able to increase our edge, we're able to increase our chances, our probability, and get more profitable trades. Okay? Alright, so now let's talk about the last question here, which is, do I need indicators? And the answer is indicators are not necessary, okay? But we are going to use free yet powerful indicators that will make our job easier to find high probability trading setups, and you don't need to pay a dime for these indicators. You can find them in your software, okay? And I'm gonna show you how to use them inside the Trading Profit Formula Coaching Program in order to find high probability trading setups, in order to use our strategy with an edge with 1 to 2 risk to reward ratio. Okay? So these are the major questions, the most burning questions that most of my clients have, the most problems that they face, the biggest problem that they face before they join the Trading Profit Formula Coaching Program. So I hope you enjoyed watching this video as much as I enjoyed creating it for you. I hope you get a lot of value, and of course I'm looking forward to talking to you soon. So make sure to click the button below, apply for the strategy session, make the booking, choose your schedule, your appointment, and I'll talk to you soon. We can talk on the strategy call. You ask me your questions, you tell me anything that you might face, any problem that you might face. I'll try my best to help you, and if you want to become a client after that and join the Trading Profit Formula Coaching Program, then fine, that's great. And if you don't, then fine as well, we'll still be friends. Okay, so no pressure whatsoever. Anyway, thank you so much for watching this video, and I'll talk to you soon. All right, click the button below, apply, and I'll see you in the strategy call. Take care. Have a great day. Bye.